Hello, Jason here from Fix My Books, and again, Canadian exit taxes. We have a good question here. I get asked this one a lot. Do I have to pay tax on my RRSPs, TFSAs, or pensions when I leave Canada? Now, listen to the whole answer for this because there is the exiting portion, but then there's the place that you move to that may affect your situation. So when you leave Canada and you cease to be a resident, there are deemed disposition rules on certain types of property. And when it comes to this type of property that we're talking about at the moment, so RSPs, TFSAs, pensions, this is actually excluded property. So you do not have a deemed disposition. So RSPs are not subject to deemed disposition rules. So you don't have to pay any extra taxes on those for any gains that you have in your RSP account. Same thing for the TFSA account. There are no extra taxes on this when you leave Canada and become a non-resident. But you can't contribute to your TFSA when you leave, right? So that's it. It's done until you come back to Canada, of course, if you come back at a later date. But the income that you earn while you're a non-resident of Canada, it remains tax-free within there. So that just continues to grow. Pensions, so RPPs, they're also excluded from deemed disposition. So you don't have to pay any extra taxes on them on your time of emigration. Instead, the pension payments, they're going to be subject to Canadian withholding tax when they're paid to you as a non-resident. And this is also the same for RRSPs. So those two, kind of think of them together. They don't have the deemed disposition, but when you take money out of them, they're going to be subject to withholding tax. So there are certain other things, so excluded rights or interests. So there's other types of retirement income funds, so RRSPs, deferred profit sharing plans. They're also excluded from deemed dispositions. But what you also have to watch out for, and this is the planning side of this, is what place are you moving to? Where are you moving? So the US tax, if you're moving to the US tax treaty provides you some protection here for certain accounts, not all of the accounts that I've mentioned, but certain ones. But that's on a federal level. You also have to consider the state level, and not all states are the same. And so they may recognize the federal rules and play by the federal rules, or they may not recognize, say, for example, your RRSP in the same way. And every gain that you have each year on your RRSP becomes a taxable gain in the state that you live in. Now, all the states are different. They all have different laws. And that's why when you're leaving and you're moving somewhere, you don't just think about, what do I have to deal with respect to Canada? You also have to think about, what do I need to deal with in the place that I'm moving to? And so if you're confused by any of this, feel free to reach out. My name is Jason at Fix My Books. And feel free to like, share, subscribe. And if you know anyone that this can help, send this video to them and have a great day.